Oh man, hey everybody, how's it going? If you're looking for something to blame for why this market just cannot move to the upside, you need to take a look no further than this very chart you're looking at right now. This is the chart that's the bane of our existence right now. It's keeping Bitcoin below 30,000 and stopping us from getting back up to 45,000 and triggering the next bull run. What is going on? We're going to break that down a lot more. Smash the likes. Don't forget to subscribe. Please do support this channel, guys. In moments like this where the volatility is really low, I know a bunch of you enjoying these day-to-day updates, but you've got to smash up likes. You've got to subscribe. You've got to comment below to help the algorithm so more people see realistic content instead of all that moon boy content. So the truth about what's going on is the dollar index, right? The dollar index is what I'm showing you here, and this is a clear indication of risk rotating off. We've been speaking about this for many weeks now, and you're seeing it play out exactly as we spoke about, moving from the bottom of this channel all the way to the top. But when it did so, it moved, it retested, and it bounced, breaking the previous peak. So this is showing a lot of strength here on the daily chart. It's taking over its EMA ribbon on the daily, bouncing off of it really nicely and moving to the upside. If I show you this on a weekly chart as well, it's above its weekly EMA ribbon. The weekly ribbon is starting to flip, so the lighter yellow colored lines here are going to start to cross over the darker red colored lines, which shows a big strengthening move coming up for the dollar index. And the more this dollar index moves to the upside, the more pain Bitcoin's going to find itself in. Remember, dollar index moves to the upside. It shows strength in moments of risk rotating off, right? People flock to the dollar as a safety asset because the US dollar is considered the risk-free asset. They don't want to be in crypto. They don't want to be holding Tesla stock. They don't want to be holding, a high growth tech company stock. No, they don't. They want to be in their dollars. They want to keep things safe. So people rotate here when there's uncertainty. And one major catalyst we had was the increase in oil prices. Now we're seeing recently here that there's been an increase in oil prices, partially due to, well, mainly due to Russia and Saudi Arabia deciding to extend their supply cuts voluntarily. So they've got together and said, we're going to extend the supply cuts. That pushes the price of oil up, and that drives up fear about our good friend, the friend we've been battling for a long time, inflation. Yes, if oil prices are going up, that's a huge driver for headline inflation, which of course we've been working so hard to push to the downside. So now markets are unsure. Because remember, the whole conversation is, are we going to get that pause? 92% of the market in 2 weeks' time on September the 20th are expecting Jerome Powell to come out and pause his rate hikes. And remember, when Jerome Powell is our friend, when he loosens monetary policy, when he stops hiking as well, that's positive for Bitcoin. That's positive for the risk on assets for us to start moving to the upside, because he's going to increase the supply of money. So what we're looking at here is that the market's expecting a pause. But what this does now is that markets may in the back of their head go, you know what, maybe he's going to pause, but leave the door open for November the 1st, the next meeting, to do another rate hike. Because initially what markets thought, well, okay, we'd pause there and stay paused for a little while. But maybe he's going to pause and then leave the door open for another rate hike, considering the oil price increase as well. So this is not a crypto-specific issue. It's leading the US stock market to be down yesterday, and the pre-market struggling as well and having a sluggish start to September, like CNBC say here. And obviously fear in the market is sitting at like that 40, 42 level here, as you can see. So it's not crazy fear. It's not like crippling fear, but it's just the lack of interest which I'm sensing in the market. And it's this frustration around inflation, not getting it resolved, and almost the boring nature of what's going on right now, which is leading the lack of interest in crypto. But from a fundamental perspective, we are not going to go anywhere anytime soon unless this dollar index gets rejected. Unless we can put this dollar index back in its box, make it lose its weekly EMA ribbon, and continue the downward trend, we're in trouble here, because the dollar index is going to want to go for a big move. It's not going to want to break up from here just to kind of go up here and chill. No, it's going to want to test that previous peak. It's going to want to test that previous peak from September 2022, where it went all the way up to just here shy of 115 on the US dollar index. And that could spell big pain for crypto. Remember, if I zoom out, every time the dollar index got rejected, those big rejection points here, that's when crypto has done really well. That is where crypto and risk on assets have done really well. And even during this period when it got rejected from September 2022, we did really well. Bitcoin went from 15,500 up towards that 31, 32,000 range. But we needed that fully extended move, right? Last time it had a fully extended move all the way down here, even down to the eventual lows of 89. We bottomed out so far here, right? We bottomed here at 9,900-ish. So really it bounced from the 200 exponential weekly moving average. That's this blue colored line here. It managed to hold support here, and now it's back above its weekly EMA ribbon. So this dollar index is showing strength. It doesn't look like risk is ready to rotate back on again. Yeah, there are still worries about the economy being too healthy. Remember that promulgates the inflation problem as well. Oil prices going up exacerbates the inflation problem as well. And so investors do not have a route to certainty to say, oh look, we're going to have one more rate hike and then we're definitely going to pause for 3 months and then Jerome Powell will start cutting by the start of next year. They don't know. They literally don't know. We don't know because the data keeps coming out and keeps confusing us either way. And so we're sat here now, risk rotated off, dollar index having 6-7 weeks here, green consecutively moving to the upside. I mean, this is unprecedented. This is insane strength by the dollar index here, just moving to the upside. And the last couple of months have been exactly that. Risk rotating firmly off. And based on that, we now sit here in a position on Bitcoin where we're just moving sideways here. But the risky pattern continues to be in play, and I need you guys to be aware of this. Let me just find a cleaner chart for you guys. It's this M pattern. This M pattern really, really worries me. If you remember, guys, we were forming this cup and handle pattern, right? And the neckline of that cup and handle pattern was this yellow line. But this yellow line here around that 30,000 mark has ended up rejecting us 2 times. And remember what I said, when you get rejected from a cup and handle pattern 2 times like this, you have, this is the handle bit, and then you get rejected again, you end up creating what is known as a double top pattern. And again, if you're not familiar with this stuff, guys, ijaz.uk/TA, we go through all of this. All the technical analysis I've learned from TradFi, you get in one structured education program. No nonsense. It's all there with the chapters. Use it as encyclopedia. Anytime you're trading, you think you've spotted a cup and handle pattern, go to the cup and handle section, open it up, make sure you've got it right, how to trade it, how to play with it, how to invest using it. It's all there in one place. And I'm going to always add new lectures in there. Never going to offer another TA course for you guys. It's just that one, and I'm going to keep adding more and more advanced lectures in there. So what we end up forming is this double top pattern. And this is what I want you guys to monitor right now. This M pattern I've been calling for quite a while. Ever since we started stalling up here, I said, guys, you need to watch out for this M pattern. And this M pattern sits at a neckline just across there at 24.8. So if we went up, come down, rejected, go up again, rejected, if we lose this neckline here, that could spell a big, powerful move to the downside, and it will not be fun here for Bitcoin. That's what could trigger you to this pivot point here, which brings you around that 22,000, but even worse, could bring you all the way to some of those lows back at that 15.5 level again. So those are the levels I'm looking for here on the chart. Now, the other structure I want to share with you guys is the following structure. You guys know I've been looking at this structure. Let me just zoom in. This is the channel we've been here on the Bitcoin price on the weekly channel, right? We were in this channel, moving nicely to the upside, and then we failed and moved to the downside. This neckline is the one I just shared with you, that same M pattern, right? It sits at 24.8. So that's my first level of support, and I'll start nibbling around there. If we fall and break down from the M pattern, which I just shared with you, I'm looking at 19,900 to about that 20,000 level for my next bit of nibbles. Remember, we bounced nicely from there previously, so there will be a lot of support at 20,000. And then failing that, that's when I look to the bottom of the wedge, all the way to the bottom of the channel, where the channel started, around that 16,200, 16,300 level. Those are the levels I'm looking out for right now. There's no benefit to me fear-mongering right now to say to you guys, oh look, we're going to head to 12,000, we're going to head to 10,000. There's a lot of that going on right now. A lot of it is hyperbole. A lot of it is, just sensationalism to get views and clicks. The reality is those are the key levels I'm looking for the chart, and I will be looking for sniper entries as we head closer to those supports to add. Right now, I don't really feel desperate to add. I want to wait till we go test those key levels. 24.8 if we do, a bit lower at 20,000, I'll be more than willing to nibble at those levels. These prices we're seeing right now are nothing too special for me, right? We've seen these prices a couple of weeks ago, and we've had opportunities to nibble around here for quite a while. I'm waiting for a little bit more of a weakness if we get it. That being said, you guys already know I'm locked and loaded. My bag is ready to go. I've got about 10 to 12% cash on the sidelines, ready to buy the dip, but the rest is locked and loaded. Ready to go, ready to get closer to this halving and see this move to the upside. Hopefully that explains what's going on in what can be a really stale market. If you appreciate this type of content, smash up the likes. Don't forget to subscribe. Do support me with likes and comments, and go watch this video here, and I'll see you in the next one.